Okay, welcome back again. This Forex Foundation course 4, SFC4 is just a course on technical analysis. I'm going to make my best to see that this is as condensed as possible. So, in technical analysis, there's what we call trends and flats. As usual, if you've been trading the market, you discover that the market is either moving up, down, or sideways. There are only three expected movements in the market. Either it goes up, or it comes down, or it moves sideways. That is to say, we have the bullish trend, which is refers to the upward market where the market is going up. We'll have the bearish trend, which is the downwards movement of the market. And we'll have the ranging market, which is when the market is actually moving sideways, when it's bound within a range. So a recap for that on two things, or let me say three movements you notice in the market is either moving up, moving down, or going sideways. So let's just look at some of the illustration on this very course material. You notice something. The market is actually moving up, moving up, moving up, moving up, moving up. So you see actually that this is actually a move up. Then you could see another illustration here is the market is just moving downwards, 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 downwards. This is quite a lot of money. So let's look for the next one. So here we have something. Okay, this is a bullish market. Since the market was going up, is a bullish market. You get me? This is a bullish market. This is a bearish market. The market was going down, and this is a ranging market, sideways market. The market is bound within a range. It's not going up, it's not going down. So quickly, let's move to the next concept on technical analysis. We have it to be support and resistance. So the support level from what we have here is a horizontal line below the price, serving as a barrier to price. Resistance is the opposite, is direct opposite of support. So a resistance line, a resistance line is above price, acting as a barrier. Price can only do two things when it gets to this support and resistance level. It either bounces back or breaks through it. Now, we'll be speaking about two main types of support and resistance. And we have the historical and the psychological level. Okay, the historical level is a support or resistance level that has its reference points from a previous price action. The historical level is from a historical resistance or support is from the previous price action. So what do I mean by this? Is a level of support or resistance in charts whose reference point is from a previous price action. So that's what we refer to as historical support and resistance level. Okay. So when we're in a historical support and resistance level, one thing we have to do is that we anticipate a repetition of such an action in the future. I think I should have an image to show for it here. Okay, this is nice. This is support line, as we said. Remember, we said something. It's below price and it acts as a barrier to price from moving downwards. In other words, price reacts from it. Let's look at this very definition. He said a support level is a horizontal line below the price, serving as a barrier to price. So if you watch here, it is below the price. When price came to it, it bounced up. Are you seeing this? It came back again, it bounced up. So it could not break. This we just mark here first touch, second touch. We rule it with a straight line. Are you seeing this? Now, you could also see a very a minor. This is actually a salient support line here. Though I did not rule it out. If you notice something, the market acted as though it was going downwards, but it's equally bounced up from here. So if you want to draw your line, what will you do? You just extend it with a straight line, expecting a similar reaction from it in the future. And if you watch, when the market came here the next day, it did the same thing. So let's quickly move to a resistance line. We said a resistance line is a line that is above price, acting as a barrier to price from moving upwards. So somewhere around here, you will notice something. The market came towards this level, it's dropped. So what are we going to do? We'll draw a line above it. So this is a resistance line, and we're expecting a similar reaction in the future. When the market came towards this level in the future, which is quite the next day, it did the same thing. So I believe this is actually getting clearer to us. So let's quickly move into the next concept, which is psychological level. The psychological level, it is different because the price is a trend, and we identify round number levels like 1.500, 1.600, 1.400, and so on. This is because this level registers easily on the mind of traders. Therefore, we expect a reaction. Yeah. Should I say, just take a look at these numbers and how it's easy to be identified. When we look at the chart now, we see a number that we can identify as a round number. You just look at the market reaction on these numbers. You can actually go back to your chart and watch it yourself. So we expect a bounce off or an impulse when the price crosses this level. Now let's look at I should have some illustration for it here. Now look at this is a psychological support level. Look at what the market did. 1.40700 is a round number, so we should be expecting a reaction on it. Go up here, you will see something. 1.41900. If you put a straight line from here, you see that the market was consciously reacting from it. Then watch this one here now. 1.4200. The market reacted from it. So these are psychological numbers, psychological support. If you look at this one now here, this is 1 point. If you put up a straight line, you notice that this is 1.40900. So these are psychological support line and resistance level. There is something it does to price action because it registers easily on the mind of the traders. So now take a look at this one here. So this is a psychological resistance level. You see what's just happened here? See what just happened here? It's just almost the same thing everywhere. It's almost the same thing everywhere. If you take a look at this line now and pull it up straight, you notice that this is 1.41200. I don't know if it's getting clearer. Okay, I believe it is. Let's quickly move on to the next concept. So channels. Channels is drawing support lines above and below the price to serve as it controls. We look to buy from the lower trend line only from the demand level. In an upward channel, we are more inclined to buy, and like in a downward channel, we are only interested in a sell. So a lot of concept I'm teaching you now, I will actually build upon it when we move into the advanced courses and so on. So these are just the basics. So take everything you are getting here to heart because they will serve as a foundation for what is to come. So remember what I said about channel. It is drawing support lines above and below the price to serve as it controls. So let's take a look at this now. You notice something. When the market is an uptrend and you are able to place a line like this above and below it, it means that the market is in a channel. So when we're in a channel, we'll look forward to buy. Now, and the best point to buy is from the baseline of the channel. Last from the point like this, point like this, point like this, point like this, and point like this. You have maximum profit from it. Now, the point at which the market breaks either of this trend line, serving as its control, might signify or imply a change in trend. Either it's about to start moving sideways or it's about to reverse. Expect more on this from the future courses. And this is a descending channel. So Like I said earlier, watch the way the market broke through from this trend line, signifying something. A reversal has occurred already. So we're expecting a move up, which this is an indication that the down move is already expired or exhausted. So I did my best to keep this as simplified as possible. Then let's look at price action breakout. I majorly, in as much as I trade some other concepts or strategy or system or approach to the market using basically price action as a foundation, there are some basic, knowledge that I actually need to put in place, maybe from pattern trading that we know and so on. I so much love this price action breakout. It's a kind of using measured move. It's a kind of measured move using breakout pattern. I love it so much. So one of the best pattern for this is actually the triangle. When you can boldly place a trend line above price this way and below price this way, and it tends to converge to a point, it means that we are like there is a kind of shrink in price, and we should expect a breakout from around the tip where price was trying to converge. Now, when I see a move like this, it always, shall I say, gives me joy, because the only thing I have to do is I'll measure the base of the triangle. When I measure the base of the triangle, I know it gives me the pip range of the base of the triangle. Then I will go to the points where the two lines of the triangle converged or met, and I will measure that exact pip range. When I measured the base of the triangle here, I got 129 pip. So I had to come to the points where the two trend line converge. Repeat, measured 129 pips. Implication, I know that when the market breaks out from this pattern, it is going to repeat a 129 pip range. Is a must. Yeah. I've seen this repeated in the market time and time again. So if you watch, the breakout occurred around here. The market went here, picked orders, it kind of consolidated a bit and went down. And if you watch, this was where the 129 pip range stopped, and the market just got through to the take profits and added some extra pip move, which is none of my business anymore because I've gotten what I wanted, and that's all. So just these are some of the basic concepts. You just have to look at them in technical analysis when you are trying to interpret the chart. Indicators are aggregators of the values displayed by price. I'm not going to be giving an in-depth teaching on indicators on this very course. Indicators, they actually help your perspective in the market depending on what you are looking for. So an in-depth teaching on indicator will be on another course. So for now, I did everything I can to make sure that this course is as condensed as possible. So just go through it, pay attention, maybe as a newbie, as a beginner, look at the chart and try to grasp one or two concepts of everything I've said so far. And believe me, you will like it.